If you're thinking about buying a condo, this information I'm about to provide you could keep you from getting denied or your loan just not getting approved or the condo association not getting approved even after you're already under contract. My name is Reggie Graham and I've been helping people buy homes, condos, manufactured homes, um, tiny homes and everything for over 30 years. The big thing that people don't realize is buying a condo and buying a home are two separate loans. First of all, the condo project has to qualify. The qualifications when you buy a condo, so like if you have an FHA loan or a VA loan, that condo has to be FHA or VA approved, not just the condo, I mean the condo association. FHA VA loans require the entire community to be approved. Conventional loans are more flexible, but they still review the entire condo project. HOA Health is another thing. So HOA, Homeowners Association for the Condo Association, is a big thing. Basically, if people aren't paying the HOA bills, the condo most likely won't get approved for FHA, VA, Fannie Mae, Freddie, or anything like that. So the HOA matters because if the people aren't paying bills, then the condo's not being taken care of. It's probably has a lot of delinquencies or even lawsuits. If the HOA isn't financially strong, your loan will get denied. Nothing wrong, nothing to deal with you, nothing to deal with your financing, just because they don't see the condo as a secure investment to subsidize or to provide financing for. You could still purchase that condo, but it would be what's called a non-warrantable condo, and it will require you to put down at least 10%, but more like 15 to 20%. Owner occupancy, that's another big thing when it comes to condo associations. So, how many units are rented versus how many units are owned? Too much investor financing or investor owned properties in a condo complex, it becomes a lot harder to get financing if you're a first time buyer or you're buying this as your primary residency. Um, One of the fourth issues that we ran into that I just had on a recent deal is the HOA needs to have proper insurance, hazard or homeowners insurance, liability insurance in case something happens on site of the complex, and sometimes flood coverage depending on where it is. If you're somewhere by the water, if you're somewhere by a lake, or just or you're just in a flood zone for whatever reason. Missing coverage or a lack of good coverage or just or delinquent coverage or just not satisfying um, enough of the insurance liability as far as replacement value, what you have to cover versus what the condo complex has to cover, are deal killers. Some red flags that you want to watch out for initially are special assessments, deferred maintenance, or short-term rental issues like Airbnb restrictions. So if you go in and you plan on getting this place and there's Airbnb restrictions or short-term rental restrictions, and that's what you plan on doing is not going to be your primary residence, then you want to walk away from that complex. If you're looking for to live there as your primary residence, you want to look out for issues like deferred maintenance. Are you there and there's rails that aren't where they're supposed to be? The elevator's not working if it's somewhere, if it's a high-rise condo, maintenance signs are down, things like that. Those are things that you should look at up front. Talk with your buyer's agent and definitely get with the listing agent. Make sure the listing agent has all the condo association docs for you. That will save you a lot of time. When you purchase a condo, you have to get a condo questionnaire. It usually costs. So it costs to $150 to $350 depending on the condo association and how fast you need it back. So that's something you also have to take into account. So it's not just your home inspection. You have to get that condo letter, the condo approval documents, and your appraisal. So that's something else you must think about. The biggest thing you want to remember is not just you qualify, the condo and the association must qualify. So it's not just you. So before you make an offer and you're thinking about looking at a condo, or just give me a call. Let's look it out. You can pull up places that look it up. There's places that are already approved FHA, Fannie Mae and Freddie Mac and VA. So we can help you with that and with your agent, but your agent should also be able to pull that up. And also when you put that offer in, make sure your due diligence periods includes making sure that condo complex is already approved with FHA or VA or Fannie Mae approved. We can find issues up front during your due diligence period and allow you to get your earnest money back and go on to the next property. If you have any questions, reach out 404-461-3172 or hit me up at reggieloans.com. Talk to you soon.